Hello again, and thank you for joining us. This program is brought to you through the courtesy of First Mortgage Group, Inc. in Fairfax, Virginia. On this program, we are going to discuss reverse mortgages. And here to help us understand reverse mortgages is Mr. Scott Heggs from WCS Funding, home of the Happy Mortgage. How are you today, Scott?
Doing wonderful, Don. Thanks very much.
Scott, I want to thank you for giving us your time and expertise for today's discussion on reverse mortgages. So I'd like to get started right away, and let's answer the question, what is a reverse mortgage?
A reverse mortgage is a program for senior citizens that are 62 years or older, that are homeowners as well, that have built up equity in their homes that they would like to be able to use for whatever reason.
Okay, so why would someone choose to get a reverse mortgage?
Quality of life, really. It's about not having a mortgage payment, being able to use that equity for whatever reason and not having to worry about making a monthly payment on it.
Okay, and can you give us a rundown on who qualifies for a reverse mortgage? You said age 62, when they're 62 or older. What other qualifications?
Other than being 62, you also need to be a homeowner with a considerable amount of equity in your home, and the property needs to be your primary residence at least 6 months of the year.
6 months of the year. And how do you determine how much equity they can take out of their homes to a reverse mortgage?
It's a formula developed by HUD, and it's a calculation that goes into that, and based on their age and the value of the home, they come up with an amount that they're able to pull out.
So the older they are, then the more money they can pull out?
That's correct.
Probably.
That's correct.
HUD insures these loans.
The loans are insured by HUD, correct, so the money will never run out. If they've elected to take one of the different tenure options on those loans, then HUD will ensure that those payments will never run out.
Okay, if the homeowner gets a reverse mortgage, do they still have the ability to sell their home if they decide they don't want it anymore?
Yes, the ownership stays with the homeowner. If they ever decide to sell, the reverse mortgage balance gets paid off like any other loan would in a transaction of a sale.
Okay, one of the questions that I hear a lot, and it has the consumer concern, is that does the lender take ownership of the home at any point?
No. The homeowner, the borrower, is always entitled to the home. They stay entitled just as they were prior to taking out a reverse mortgage. They are the owner. They have all the rights that any homeowner would have to be able to sell the property, to be able to leave it to their heirs, what have you.
Okay, one other clarification I'd like on this. So they're taking the equity out of their home. If the equity runs out, they can continue to live in the property even if there's no equity left. They've outlived the equity. Mm-hmm. They haven't made payments. They're continuing, and after they pass, the property goes to the heirs. Is that correct? Property goes to the heirs?
Property goes to the heirs, whoever is in their will or estate, correct.
Okay, and then they at some point they have to pay that money back. How does that work?
It is a non-recourse loan, which means the loan stays with the property. So if in the end the mortgage becomes underwater and the value of the mortgage is higher than the value of the property, then HUD insures that difference to the bank. It does not go to the heirs, that debt.
That doesn't go to the heirs. So
correct.
If the property is upside down and the heirs can't sell it for the unpaid principal balance, they're not liable if it doesn't come, the extra money doesn't come out of the estate.
That's
they
correct.
Sell it, similar to maybe a short sale. If we talk
I'd say similar, yeah. I mean, the debt doesn't carry on to the heirs; it just stays with the property.
It stays with the property.
Yep, and if the bank has to, if the heirs cannot sell it for what is owed on the mortgage, then they just simply tell the bank they take the property back, and HUD insures the difference to the bank.
Now we're going to discuss the options the borrower has for receiving their reverse mortgage payments. Scott, how many and what methods are available for payment?
Okay, I'll explain each one separately. The first would be called the tenure. I would liken that to kind of receiving an annuity payment from a pension. The homeowner gets a fixed amount of money every month for their entire life. So just similar to a pension or an annuity. The next one would be called a modified tenure. That is a combination of that check coming in every month for the remainder of your life with a line of credit. So in that scenario, the payment would be less, but they'd have access to a line of credit to draw down on if they wanted to use that. The next one would be called the fixed term. That's where they get a set amount of money for a fixed term, like say 10 or 20 years. Okay. The fourth one would be just a line of credit. They can structure it as an open-end line of credit that they can draw as they need it and use it for whatever reason. And your fifth and final option there would just be taking a lump sum at closing, a lump sum fixed rate. That would be the fixed rate as well. That's the only option that is at a fixed rate on the HECM program. All the other ones would be a LIBOR adjustable rate. So and that is a lump sum at closing.
In your opinion, which option is the most popular?
The lump sum fixed rate typically is what most people take. So I would say the second would be the line of credit. A lot of people do use the line of credit because they don't always need that lump sum at closing right then. But so they'll take part of it at closing, leave the rest in a line of credit. But the fixed rate lump sum is the most popular.
Okay, and the proceeds from the reverse mortgage, does it have anything, does it affect the Social Security income or Medicare benefits from senior citizens? This is totally separate. This is just the equity in the house, nothing else, no other income or pensions or anything are attached to this in any kind of way?
It is not considered income by the IRS for the purposes of Social Security or Medicare. It is strictly, again, it's considered borrowing the equity from your home.
Okay, good. Many concerns come up about what will happen after the homeowner passes. What does happen after the homeowner passes?
Well, typically, if the house is left to their heirs, they have 2 6-month options. They have 6 months to decide what to do with the home. If they can't decide in 6 months, they can elect for another 6 months. So up to 1 year, they have to decide what to do with that home. If they decide they want to keep the home, they would have that year to be able to obtain either another loan to pay off the balance on the existing reverse mortgage and keep the home, or they can elect to sell the property and pay off what the balance is on the reverse mortgage, and any remaining equity is theirs.
Any remaining equity would go to the heirs. So if they're upside down, see, they've exhausted all the equity, they're upside down, it does not come from any of the other money from the...
There's no liability to the heirs in that situation. That's why it's a HUD insured loan. HUD insures that they don't pass on any liability to their heirs.
That is a nice feature of the program, no question about that. In general, what documents does a person need when applying for a reverse mortgage?
The documentation process is extremely limited. Since there's no income or credit qualifications for the program, really the only documents typically in a typical situation would be a copy of a photo ID, a copy of verifying your Social Security number, so a copy of your Social Security card or a Medicare card, something with your Social Security number on it. Typically they want to see a recent utility bill which shows the owner occupancy of the property, so that would show that they're actually living there with a utility bill in their name. Or you can use other things like cable bills, phone bills, things like that. Homeowner's insurance policy, that's about it.
That's it.
Yeah.
Not like a forward mortgage where you have to give everything.
No.
Bank statements,
Extremely
tax
simple.
returns.
Of course, the house does have to get appraised by an FHA appraisal. It has to meet FHA standards, but as far as the borrower's documentation, it's very limited.
And what about disclosures? Typically on a regular mortgage, there's 40 or 50 pages up front that they have to sign. What about the disclosures? What kind of disclosures do they sign? How many pages would they sign? I'm assuming they have to sign a truth in lending or a good faith estimate of the cost. Is there anything involved in it like that? Like a regular
Yes.
one?
Oh yes, it's an FHA loan, so there's lots of disclosures.
A lot of papers to sign, right? When they're going in and then in the end, at the closing.
Unfortunately,
Right.
yes.
Okay, one other question. How about if the property's in a living trust? Are living trusts allowed?
Yes, they are. Living trusts and life estates are allowed under the HECM program. They do have to meet HUD guidelines, so they do have to be reviewed by the underwriter, but they are allowed.
Would that be a revocable living trust or irrevocable living trust?
Irrevocable.
Irrevocable living trust. Scott, I often hear the word HECM when someone is discussing reverse mortgages. What does HECM stand for?
Okay, HECM, it's an acronym, HECM, stands for Home Equity Conversion Mortgage, and that is the official term dubbed by FHA for the reverse mortgage program. You don't hear too many people refer to it on TV or anything, but that is the official title for the program.
Thank you for clearing that up. Okay, and to qualify for a reverse mortgage, must the home be debt-free and paid off free and clear?
No, that is another common misconception. The home can have a mortgage on it. In fact, one of the primary uses that a lot of homeowners do is to pay off that existing mortgage with a home equity conversion mortgage to get rid of that burdensome payment. So they still need equity in the home, but if they have a mortgage on the home, it can be and would be paid off by the reverse mortgage. It's referred to as extinguishing a forward mortgage.
Okay, and you hear a lot of rhetoric about banks wanting to own homes, so on and so forth, which is truly a misconception and a myth. The same thing with the reverse mortgage lender. I'm sure they really don't want to own the home. They just are there to do the loan. Can you elaborate on that a little bit?
Yeah, there's no incentive for a bank to force a sale of a property. In fact, because it's an FHA insured loan, you really don't have to worry about that. As long as the homeowner upkeeps their end of the bargain, which is clearly specified in the loan documents, really it's just make sure the property taxes get paid, make sure the homeowner's insurance gets paid, and keep the property in reasonable condition.
Okay. And if you have a borrower and a co-borrower, after the death of the borrower, how long can the co-borrower live in the property?
The answer would be indefinitely, or for their entire life, or as long as they want to. In the situation of, for instance, a husband and a wife, and if the husband passes away, the wife can remain in the home as long as she likes.
Okay. Scott, I really want to thank you for being on our show today. You've really been generous in your time, and hopefully if we have to have you back on our show again at some point, and as we get questions from our viewers, we'll be getting in contact with you. And
I'd love to be back on. Thank you very much.
Thank you. We really appreciate it. Thank you.
Thanks very much.
Now for our viewers, I want to suggest if you are interested in finding out more on today's subject, reverse mortgages, you can go to our website, www.fmgi.co. Stay tuned. We'll be right back to discuss real estate sales and the appraisal process with Diane Quigley.
Hi, I'm Joel Vidnosky, the Executive Director of the Alzheimer's Family Day Center. We are a private nonprofit adult daycare center who provides a wide range of services to those with Alzheimer's disease and their family caregivers. We are the only adult daycare center in the Washington, D.C. metro area that is dementia specific and also provides programs to those in the later stages. I would like to take this opportunity to thank those who have made our mission and vision possible through their generous donations, their gifts, and their time. Thank you very much for your support.
Hi, I'm Carrie Idle Richards. I'm the Communications Coordinator at the Alzheimer's Family Day Center, and I'd like to thank all of our volunteers, supporters, and donors.
Hi, I'm Karen. I'm the Activity Director here at the Center. We would like to take a minute to thank our sponsors and donors for everything they do for us and our friends at the Center. Thank you. Bye.
Following the tragic events of September 11th, there have been hundreds of violent attacks against innocent Americans.
Remember what that flag you're waving stands for.
Remember, please stop the hate.
We're stronger when we are united.
Remember what that flag you're waving stands for.
One nation under God.
Indivisible.
With liberty
And justice.
For all.
In America, there's either room for everyone, or it's not America.
Don't pick the wrong fight.
Let's keep America land of the free.
Stop the hate.
Welcome back, and thank you for staying with us. I would like to give you some background on our next guest. Diane has an extensive background in real estate, starting in 1978 with the South Florida real estate firm. She was a member of the $1 Million Club in her first year and quickly moved up to Vice President of Sales in 1980. After she obtained her real estate broker's license in 1984, she received a Bachelor in Business Administration with a concentration in real estate. She minored in real estate appraisals, which is a critical part of understanding real estate sales. Diane moved to the Virginia area in 1986 and has been in business in Northern Virginia ever since. She is a certified residential appraiser and serves on the Virginia Appraisal Board as the chairperson. Her 25-plus years of experience and thousands of appraisals have given her keen insight into helping buyers and sellers in this difficult market. Thanks for joining us, Diane.
Thank you.
Diane, do you still teach appraisal broker classes?
I do. I typically teach for Northern Virginia Association of Realtors a couple of times a year. They'll be offering the class again this fall to salespeople who are trying to obtain their broker's license.
Agents, buyers, and sellers are always concerned about the appraisal. Can you tell the audience what the process is and why there always seems to be a lot of concern?
Well, Don, as you know, there have been a lot of changes in the real estate appraisal industry. There's a lot of regulation, a lot of changes in the regulation. In the last couple of years, you've seen the process change from where a lender would order an appraisal directly from an appraiser to the lender working through a third party, typically called an appraisal management company. Some of the problems with that, of course, is that the appraiser that is chosen is not necessarily chosen for their expertise for that particular property or that particular area.
What types of improvements or upgrades to a home would normally add value?
Well, typically, as most real estate agents will tell you, updating kitchens and bathrooms are probably the number one improvement that an owner can make. Anytime you add square footage, it typically will increase value, but the most important thing is whatever you add to that property should have good functional utility. Unless the home is so small, it would make it difficult to sell, but probably the kitchen. I would say rather than putting a lot of money into the kitchen, try to do some smaller things in the kitchen that will improve the appearance of the kitchen and perhaps the functional utility, and then take the remainder of the money and update the bathrooms. You don't have to put in granite, although granite is a big selling point, but you can use other materials that are very nice and will help to sell that property.
I often hear from homeowners that if I put $50,000 in my house for a new bathroom or a new kitchen or a new addition, I'm going to get $100,000 back. Could you tell us about that?
A lot of contractors will tell homeowners they're going to get back 100%, but unfortunately that's not true.
Would you think it would be better to just lower the price of the house than go through all the gyrations of trying to improve the house to get the extra dollars?
And this is my opinion, Don, but I would say it's probably going to be worth it to update that house.
Is there a loss in value if the home is located on a busy street?
Yes. What you have to remember is it all depends, of course, on how busy the street is, whether we're talking just a main thoroughfare through the community, and it's all going to be relative to other properties. So if you ask me now, there's a property on Lee Highway, how much does that impact the value? The way I would determine that is to find properties that are located on very busy streets, compare them against similar properties that are not, and look at the percentage difference.
In your opinion, what are the three main things that sell a house?
As you know, most people would say location, location, location. Location is absolutely the most important part of it. But certainly condition and probably size.
Size. Of course, price.
Oh, definitely price, yeah, yeah. Actually, that's probably number one, Don, but that's all going to be relative. You know, people will say, oh, but that house is worth so much more. No, if it didn't sell, it wasn't worth that.
It's only worth what someone will pay for